Hi everyone, my
Go
name is Utkarsh. I'm the author of The Seductive Illusion of Hard Work. And one of the reasons I wrote this book was to try and demystify the principles of interesting careers. Today I have with me Akshay, who is a longtime supporter, friend of Network Capital, and I'm very excited to dive deep into some of his reflections from the book. He'll be with us tomorrow as well, but tomorrow is a more subscriber-only session for careers in venture capital, etc. But Akshay, really excited to have you. Thank you for everything that you've done for Network Capital. Let's kick it off with a quick introduction of yourself. Who are you, and what do you do today?
Yeah, sure. So, Akshay, I currently work in venture capital with a firm called SIG, and my role involves in investing in early stage businesses across India, China, and Southeast Asia. Given kind of our background and regional footprint, a lot of my job involves kind of connecting the dots between the three geographies and seeing how models, talent, and ideas translate and localize across the different regions. Just in terms of my personal background, I grew up between Bombay, London, New York, and have been in Hong Kong for the last almost 10 years now.
Wow. Well, so when you look at your multimodal, multi-geographic career, do you think that hard work leads to success?
Yeah, so this is, I guess, the kind of crux of the book, hence the title, right? I did think about this a fair bit, right? And I know that one of the kind of key comments that you make is that hard work is necessary but not sufficient. And I think that's absolutely the case. Time being one of the most valuable resources, well, being the most valuable resources any of us have. I think the thing that I've definitely realized being in venture across these different geographies, across sectors, it's very easy to do a lot of work for very little gain, spinning yourself in so many different directions that at least I don't develop enough depth or conviction in any one. So I think having a view that translates into goals, that translates into milestones, and then having that be supported with hard work is ultimately what results in success. So yeah, I'll pause there. If that answers your question.
Yeah. And one of the principles of discovering meaningful work is meeting interesting people. So there's a lot of component of who are the five people you spend most of your time with. What's serendipity? So when you think of the people in your network or in your friend circle, right back from Grinnell days, your college days, what are the kinds of people who really propelled you to move forward, and who've been, without naming people, obviously, what kind of people have sort of held you back? And do you think that who you spend time with correlates with who you become in life?
Yeah, so I think that's definitely a key tenet that I believe in. That the people that I am around enable me, right? Push me to be better, push me to learn, push me to think in different ways. So it's an interesting question. Like, what are the types of people that I've surrounded myself with? I mean, I think me and you've talked about this in the past, right? One of my favorite books is Give and Take by Adam Grant. Right, where the concept, very simplistic, right? Three types of people: givers, matchers, and takers. Right, takers ask themselves the question, "What's in this for me?" Right, givers are people that ask, "Well, how can I help you?" And matchers kind of somewhere in the middle, right? And the question that Adam Grant poses in the book is, who are the most successful people, right? And who are the least successful people? And the answer is, I guess, kind of intuitive, where the people that are the most successful are givers, but the people that are least successful are also givers, right? Where the difference being recognizing when you're spending your time with someone that's asking themselves the question, "What's in it for me?" And I'd say that the people that I've surrounded myself with, or continue to surround myself with, do demonstrate a genuine interest in asking the question, "How can I help you?" Without
Yeah.
an expectation. And that can be all from different disciplines, from different forms. Like as you know, right, my wife is in the art world. It's very, very different from the world that I'm in, but has a mentality that's very similar in terms of how can I authentically be of service? How can we collaborate? How can we co-create? How can we generate something? And I think those are the kinds of people that I like to spend my time with. And the people that have, I'd say, held me back are that other category, people that do ask themselves the question, what's in it for me, more so than the opposite.
The whole premise of network capital has been, how do you create a platform where givers of the world can unite? How do you transcend competition and help others create their category of one? And towards that end, I love the way you've described the way you look at your network into givers, matchers, and takers. And I observe this on network capital as well. The people who've derived most value out of network capital are the ones who've actually figured out interesting ways to contribute to network capital, rather than asking, okay, this is a mega network, how can I get X and run away? And it also correlates with another thing that this one I talk about in my Harvard Business Review article, the difference between a finite and an infinite mindset. And I know that that's something that you care a lot about as well. And in this book, The Seductive Illusion of Hard Work, there is a constant nudge to the reader to think about career, life, work, relationships with an infinite mindset. There's no winning in, say, a relationship or a friendship or a meeting. How do you create these kinds of win-win outcomes? Are there some things that you stumbled into your work or through the book or through your friends where you've seen that people are getting better at how can people get better at creating win-win scenarios for other people? Any thoughts on that?
So, I don't know if I can answer the question if I've seen. Well, look, I mean, I guess part of it is also just the process of growing up a little bit, where people do recognize that this is a small world, and there's no utility in having negative relationships long term. But I think one of the things that I really appreciated out of the book, it's early on in the book, but it's the value of confusion as an asset, right? The value of confusion or not being able to understand as an opening, as an access point. And I think that really applies in relationships. I think one of the hardest things in my job is doing deals, right? Working, people often say that the VC founder relationship is like a marriage. Well, I'd say it's worse than a marriage, right? People get divorced all day. It's much, much, much harder to break an SHA than it is to, get divorced, right? So forging these very, very long-term relationships with people that at the end of the day, you're still doing business with, I think can open itself up to a lot of confusion, right? You see different people with different personalities, different perspectives, different priorities, and how to, and for me at least personally, in being confused by the values that someone has is been an opening to understand. Right. So, for instance, I'll give you this example of this one deal that I was working on last year, where the founder was playing real hardball, and this is something that I guess is inevitable, and kind of niggling around the corners, and minority rights, role for mechanics, like very kind of marginal areas, but taking a very, very firm stand. And this isn't, I've been doing deals in Southeast Asia and the region for 5 years, so not the first go around, but it was the first time I'd experienced this level of defense, and that confused the shit out of me, right? Just absolutely confused me. But I think what that opened up for me was understanding how much the founder valued being seen and delivering on for his existing employees and existing shareholders. His fight was a fight to protect his own, right? And that value just didn't occur to me because I always enter into these things as a win-win, as a collaborative, like, hey, look, we're not on opposite sides here. We're trying to create something because we've got to stay together for 7-10 years, however long it is. And there's no value in either one of us being seeing this as a win-lose environment. But that founder didn't necessarily put it in those terms, but his terms was, I need to protect my own, right? And so having that as an access kind of opened me up to being able to understand him and get the deal done really quickly after that. And so I think confusion as an asset in developing relationships is super powerful, especially when it's seen just as confusion. Right? It's just that I just don't understand.
That's a phenomenal point. I mean, in the book, I argue that confusion can be productive and confusion can be destructive. It's very easy to be seduced by the destructive part of confusion. In fact, we are taught that if you're confused, that is a bad thing. So, Akshay, I don't know if you know, we launched a fellowship called I Don't Know What I Want to Do with My Life. And that is one of the most popular fellowships on Network Capital. Because we're trying to make the point of confusion as an asset more well known. I think great discoveries, great relationships, the deals that you talked about cannot be arrived at if people sort of brush confusion aside and quickly start to, put false security or false comfort of wrong clarity in front of them. So you can train yourself to use confusion as an asset. Is there something that you've done, say, in the time of being a VC in the region or before that you've now become slightly better at using confusion as an asset?
Look, I would point to relationships as a key one. And it's a pretty broad statement because ultimately it's a relationship business that I'm in, and the simple premise that. So I remember early on, starting off as a VC, and especially coming from my prior, experience when I was at, corporate M&A, the job was always to know the answer, right? The job was that this is the strategy, this is what I'm pitching, this is what's going to lead to market entry success in Australia, this is the target that we should acquire, and these are the reasons why, and knowing every single detail of it. And so I kind of carried that mindset into this job as well in the early years, researching obscenely hard and believing that I have figured it out, right? And I think what inevitably resulted out of that was a whole lot of friction, because I entered everything with the assumption that I know, right? I know the answer here. And so I think the fundamental premise that I started to adopt, a few years ago is that I am actually the dumbest person in every room that I'm in, right? Because the whole VCs as a I'm sure people will have different perspectives, but our value isn't in going deep. Our value is in going broad, right? That we see a lot of different things across a lot of different industries and a lot of different geographies. But by design, that doesn't mean that we can go as deep as any entrepreneur or any industry person in one specific area. We might have certain insights and derived from the people that we're discussing, but definitely nowhere close to the level of understanding as someone sitting across the table. Or ideally, right? Or if I do know more than the person across the table, then probably not the best person.
That's a problem of a different kind, yeah.
Yeah, exactly, right? Like I should be doing that business, right? The economics are better. So I think fundamentally entering conversations with the mindset that I don't know as much as you. I know a little bit. I've read some stuff, but these are different data points. Let's have a conversation. That's opened the way to actually having really productive relationships, right? With founders, with other funds, with other investors, because that's the only way, right? I mean, if I think it's also the difference between academia versus business, right? How do you actually create a collaborative relationship is through mutual understanding. Mutual understanding can't come from a perspective of I know, right? That's a hierarchical relationship.
100%. Tell me, Akshay, are you a generalist or a specialist? You alluded to being a generalist, but in the book, I talk about being a deep generalist. So, do you identify as a deep generalist? Who is a deep generalist in your mind, and how can one become that?
Yeah, so it's interesting being in venture where like I mentioned, right? I definitely think I am a generalist, somewhere between the spectrum of deep generalist and just general generalist. But like we were talking about earlier, right? At least from what little that I've learned, this industry does require focus because there's just so much, right? There's just so much that you can spend your time on, right? In any given day, you could be meeting with a electric vehicle company, a marketplace, a live streaming platform, a knowledge sharing network. It could be any number of things. And so, how do you gain from the benefits of compounding? With that kind of a distributed approach. So I do think focus is very important, right? I spent the first couple years of my career focused entirely on fintech, particularly, kind of crossing China to Southeast Asia, that corridor. But the interesting thing again about this career is that these things are so thematic, right? Fintech was the hot sector in 2016, 2017, even early 2018, between Southeast Asia and India, but it fell off a cliff, in 2019 and 2020. It's kind of seeing a reemergence now in terms of trends, but through kind of different models. So there's a need to reinvent myself. I had become branded as a deep generalist in fintech, right? And so I needed to reinvent myself, right? Spend X amount of time, choose another focus area, and then go deep there, while still keeping an eye on all the other things going around. So I think that this, for me at least, I definitely feel I'm a generalist with some focus areas that I know a little bit more about and can have a little bit more of a meaningful conversation about. But that's, I think, just the nature of it. And look at guys like all the VC icons that we all look up to and think about. This is really where I think experience differentiates. There's nothing that can compensate for decades of experience of this compounding accumulating, having seen different models, different situations, different sectors come and go. And I think that's definitely one thing worth noting about my industry at least.
Yeah, I mean, in the book, I explained that there's a difference between, say, the Roger Federer approach and the Tiger Woods approach. The Roger Federer approach is a lot more breadth-centric and then letting depth emerge as a function of curiosity or interest. And Tiger Woods is an approach where, since you're 1 year or 2 years old, you hyper specialize and then do really well. Both are fine. But the problem is that if you superimpose the Tiger Woods approach on Roger Federer or vice versa, things start to fall apart. And we have a slight preference in general to the Tiger Woods approach because we think that, you should know what you want to do with your life when you're this age and you should specialize because that's the standard thing to do. And I think the norms of career are changing. I mean, we briefly alluded to the kind of fellowships that we run. The reason why I don't know what I want to do with my life fellowship is so popular is because the moment you hear these words, there is a bulb that lights up saying that, oh yeah, this is me or this was me until, a few years back or a few months back. So yeah, let's not try to put Roger Federer model into the other or vice versa. But yeah, the deep generalist, I love the VC example that you walked us through and how one has to repivot. Do you think that on a day-to-day basis, are you following your passion or are you following your curiosity? Or do you have any thoughts on should people follow their passions?
Yeah, so I think this is as something I guess we've also briefly talked about in the past. No one's ever no one that's ever been successful has not followed their passion, in my opinion, right? So everyone that is successful has followed their passion, I would argue. For me, it took me a while to figure out really what my passion was. And I know a lot of people in the investing world that are driven purely by curiosity, right? The intellectual, challenge of finding a thesis, of understanding something to the nth degree, testing it out, getting feedback, right? Real-time feedback from the market and whatnot. For me, that honestly is secondary. The thing that I kind of uncovered for myself is what I care about is building relationships with entrepreneurs, right? So for me, entrepreneurs are quantifiably crazy individuals, right? The level of risk that you're taking on is mathematically insane. Right? Any kind of decision tree, a probability-based matrix will give you a result, right? You have to skew the probabilities to really make it look rational. Now but however, that said, an entrepreneur is the kind of risk and the kind of burden and the kind of pain that someone commits themselves to is beyond noble, right? It's really ultimately what changes everything, right? My grandfather's an entrepreneur and not a particularly successful one, right? So I tell this story, right, where I remember being in his car in Bombay growing up. Like he had a bunch of textiles distribution shops, right? And he'd be sitting in the driver's seat in an old Fiat Ambassador that we had. I'd be in the passenger seat. In the middle, there'd be a bag of cash, like a duffel bag of cash, and he'd go around to every store and drop off, his a certain amount. Now, what I didn't realize at that time was that he had taken out a loan from fairly unsavory characters in his own name just to make payroll. And that, for me, is an entrepreneur, right? Risking literally everything because you have put a flag up on that hill and you're going to make it there, right? Regardless of what anyone else says. And ultimately, that's what changes everything. So the kind of respect and admiration that I have for entrepreneurs is really huge. And building relationships and being an advisor, a trusted advisor to these entrepreneurs is what drives me. I do all the other stuff in terms of learning and understanding and going deep and trying to be valuable in order to get there. Right. So my passion is definitely what drives me. Curiosity is a tool, right, to fulfill on that passion for me.
Yeah, I'm glad that we're having this discussion. There are a couple of things that people should know about passion, and you allude to it. One is that it takes a while to discover your passion. Normally, when we think of passion, we think of Isaac Newton and the apple falling on his head. But the truth is that the apple never fell on Newton's head. And even if it did, he was thinking about the problem for a very long time. So one, you don't need to wait for your passion to find you. You should conduct micro experiments, perhaps the way you did, transitioning from M&A, fintech to VC and discovering, oh, this region, this kind of stuff appeals to me. And the second thing is that passions can change over time. That's another aspect that we should be careful about, which is why I think the reason why this chapter exists in the book is not to paint passion or glorify passion in a certain way or paint it in a negative light, but so that people understand all the shades and colors in which passion manifests itself. And as you pointed out in your experience, it took you a while to discover, and then it evolved and it gets shaped about the different kinds of things that happen. So, Akshay, as you move further in the book, where I talk about, say, mental models and things that one has to be careful of in venture capital, there's a lot of room for error. Honestly, one has to do a lot of work to make sure that you're not following the herd or trying to be contrarian enough. Are there some things that, say, the book suggests or you've developed which helps you make relatively better decisions, or have you gotten better decision making of certain kind?
Yeah, I mean, I think the book is great in really outlining all the different heuristics and mental models that and fallacies, right, that people can kind of fall into. I remember listening to like Danny Kahneman's a podcast that he had done. I forget which one it was, but I think it was the Knowledge Project. And the interviewer basically asked him, so how do you avoid all these heuristics, right? Like how can you go through your day with all these different, pitfalls? And his basic answer was you can't, right? There's no, you cannot. You physically your capacity is not able to identify in real time, preemptively, every single heuristic pitfall that I think you can fall into. So another area where saying I don't know is super important in making an investment thesis. I think the biggest one that I pay attention to a lot is confirmation bias, because we're so trained, from our education to have a very clear thesis-driven thinking, right? This is my argument, and here's why it is correct, and here is the conclusion. As you pointed out, that there is no 95% of the time I'm wrong. Even if an investment succeeds, like I can point to a few examples where investment has succeeded. It isn't because our thesis was correct, right? It's just succeeded because it evolved, it pivoted, the team did the right things, it changed, it did X, Y, Z, and it continued to grow. So I think trying to be aware of the thesis, and this also applies, right, in going into investments, right? So we have going back to the deep generalist framework, right? Like I have a very clear view on end of the channel FMCG distribution, right? We've studied it. I've seen a bunch of different models. I have an argument, a thesis that I think is correct. Right. And entering into a conversation with that thesis, I'm either one, prone to having the data fit my thesis, looking for that, right, erroneously, not seeing certain other pitfalls, or crowd out potential opportunities because I'm so beholden to my view. And so I think confirmation bias is probably one of the bigger aspects. It's one of the reasons that us, like as a fund, we're also not thesis driven, right? It's like the benchmark model. Like benchmark is famously not thesis driven, and there's really two reasons, right? It's confirmation bias, and you don't actually see the market because you're so beholden to what you think is correct. And so that's the main one that I would highlight.
Yeah, and confirmation bias, motivated reasoning, these are things that almost all of us fall prey to at some point in our lives. And these days I've been reading René Girard extensively. In fact, there was a Network Capital Clubhouse session, which I was hoping you'd join, which was that how much do other people's preferences influence us? So knowing all of that, how do you still try and be intentional about confirmation bias, motivated reasoning, etc., is so important. And I love to talk about, Sherlock Holmes in the way. How does Sherlock Holmes avoid confirmation bias like that? I don't go into that in the book, but perhaps for the next edition. But what I do go into this book is some people who've called it out multiple times, that the pressure of confirmation bias, like Taleb, for example. He is an investor of a different kind than you, as a different asset class. And what he talks about his experience in trading and how he's learned to all of that is by practical exposure. So one thing that when I write about Taleb in my book is that he leaves a lot of room for independent thinking before diving deep. In fact, in one of his commencement addresses at the American University of Beirut, he says that don't read the newspaper, or if you want to know why, go read the newspaper from 1 year back and see how it was. Other things about some of the people that we have mentioned in the book, in the ways that they run their routines or their lives, or the mental model regimen that applies to you, that you've learned from.
Yeah, I mean, I think Taleb is foundational, right? He's foundational in terms, if for any investor. I think not only from a mathematical standpoint, the way that he kind of breaks things down, but so I studied math and economics in college, right? My senior thesis was an application of one of his graduate papers to sports trading, but slightly different. But I think the fundamental premise that he works off of is perhaps being contrarian to like the nth degree, right? Contrarian for the sake of being contrarian, or at least that's sometimes I think how it emerges, or how it surfaces on Twitter and whatnot. But I do think, and this is something also where I'm lucky to be to admire and respect the people that I work with, who always kind of practice first principles thinking, right? Does this actually make sense? Does this tally up with that conversation that you had with, a tier 2 distributor in Bandung last year in, when you're conducting a study on XYZ, right? Does this map out with, this experience that, you've had traveling, right? Whatever it might be, right? And I think that, for instance, that's pushed me a lot to question my own views, right? So like one of like the daily practices, or not daily practice, but regular practices that I have now is that whenever I'm looking at a sector or a company, I'll do a really deep review, really deep analysis, and then walk away from it for a week, right? Walk away from it for a week and then come back and critique it with completely fresh eyes. And there have definitely been instances where I look at what I've written and I'm thinking, what the hell was I smoking? Like this doesn't make sense, right? I think there's plenty of examples of hyped up categories that attracted a lot of venture capital money, but ended up eventually being silly, right? I think like one of the best examples, like Juicero, right? How much money did that company pull in? And it was a I forget how much it raised, but it was a juice making machine, right? That they sold primarily, and then they would sell you the juice packets. But it turned out that you could use the juice packets standalone. You didn't need the machine to actually do it, and it was completely kind of useless product, and so everyone kind of lost their capital on that. I mean, there's plenty of examples of investors losing money because of fraud or things that they didn't know. But there's also, so I'll put that as a different area, right? It's more about the areas that people just didn't critique their own argument.
Yeah, and taking distance from the problem is actually a pretty healthy strategy to avoid confirmation bias as well. Sherlock Holmes does that. In fact, if you read the Network Capital newsletter day before, it was on how to think like Sherlock Holmes. One of the strategies, take distance away. Because that, as you said, that when you come back after a week, you've critiqued it, you've been thinking about it, and then you can come back and see, okay, what did I miss? Or what did I adopt, which I didn't need to? In the book that I've talked extensively about different people, one theme that keeps coming back is the habit of thinking better, habit of forming a deeper relationship, habit of nurturing friendships that last, surrounding yourself with people who are givers rather than takers. Are there habits that you've inculcated in the past year or two that you've seen demonstrable benefits for?
So I think the one of the key commonalities, right? I think you said it perfectly, of all of these, people that you outline in the book, right? Like Yuval Noah Harari, like etc. The discipline is I think key, right? Discipline, but not having it be rigid, but having it be an organic reflection of what your goals are and what you're out to create. very frankly, one of the main habits, and this isn't strictly from the book, although I think some of the people that you reference do talk about the benefits of meditation, benefits of mindfulness, right? So definitely, this is almost coming up on 2 years now of daily mindfulness practice, right? The level of patience that has brought is tremendous, and I think at least for me, and I'm sure for other people, there's so much of this pressure of how do I outcompete, what's my ranking, how do I succeed, how do I be top decile, top percentile this year, right? I need automated feedback loops and real-time and all this, and the whole challenge of this, at least VC, I think, is that the feedback loops are so long. You can't think of quarterly report cards or semi-annual report cards or annual report cards. It's a 3-5 year cycle at minimum, and having the patience to go through that cycle is still, I mean, it's still brutally difficult for me, who's wired to run, work, try to push, get results, and see the results immediately, all of that kind of thing. And so I think just having a mindfulness practice has been hugely beneficial, to let myself get still, let myself put things in perspective, let myself question myself as to why do I want to push for this? Why do I want to, run for this? And I think what I've seen, especially with some of my friends who've also kind of in the industry and adopted this, and I've seen it for myself, is that I had a tendency to optimize for the wrong metrics, because those were the only metrics that I could deliver real-time feedback on, right? So one of the easiest metrics in the venture industry to judge yourself on is capital deployed. How many deals did you do? Right? I know I did 10 deals this year, right? But giving away money is not a successful measure, right? It can be if you're doing it in a methodical, systematic, thoughtful way, and the market's there, and the timing and everything else checks out. But ultimately, that's not what I think leads to long-term success in this career, right? Long-term success in this career is a function of betting and backing really solid businesses and solid founders that then leads to further, recommendations, referrals, and better expectancy on your pipeline down the line. And so having patience has allowed me to pull back my immediacy around and urgency around, just trying to get deals in the door, right?
In the book, I allude to the 3 M's, which is mindfulness, motivation, and meaning. And when you combine these 3 M's, you're able to learn better and learn across disciplines. Mindfulness is really important to avoid confirmation bias. Motivation is really important because it's very difficult to learn a lot about a sector or a space that you don't really care about. So you need to be motivated to learn about, there needs to be an overarching question. And the third is meaning. Do you derive meaning in this entire journey? And some of the people that I've referenced, some of the mental models that I've referenced, they look at this 3M framework knowingly or unknowingly multiple times. Harari, for example, spends 2-3 months a year meditating in India before he goes back to do his high throughput work. Talib takes he's early to bed, early to rise, he spends some time ranting on Twitter, but a lot of time is just
walks.
Spent on doing the math.
A lot of time walking. Long walks.
Exactly. Long walks, so forth. So, this entire space, these habits are cultivated. I think none of us have quote unquote arrived. We're all in our journeys respective. And I think with these micro improvements compounding, hopefully we'll all get there. The key thing to keep in mind is that everyone doesn't need to start doing the same things because others are doing it. It needs to come from within, whatever that might be. Because, the subtle focus throughout the book has been, I don't think Akshay should be trying to be the next X, or Utkarsh should be trying to be the next Y. I should be the best version of whatever I can be, and better than my past self, hopefully. And you should try to do the same in your respective level. And I think this sort of career intelligence isn't available widely. we do feel a sense of pressure. We do feel sense of envy occasionally. But one of my favorite chapters in the book was the difference between envy and mudita. Envy is something which shapes the world. Envy drives the world. Envy creates innovation in a weird way. Envy is a great equalizer. Without envy, there's no Proust, there's no Shakespeare. Most of literature falls apart. But envy can also be really destructive. So how do you conquer envy? In the venture world, how does envy play out? And what have been some ways in which you've seen people transcend envy, if at all?
Yeah, I mean, look, this is, I think it's I completely agree with you, right? My favorite literature has envy as a starring role, and so I think envy plays out in so many different ways. It's a lot to do, a lot of the things that I mentioned, right? Like how many deals have you done this year? How much capital did you deploy? Oh, that person's working on that deal. Oh, I wish I could have been at that shop and participated on that because they have this XYZ going for them that we don't. All these kinds of things, right? And then like we're in an industry where capital is free flowing, right? Venture capital financing is fundraising is only increasing, especially in our regions. And so you see your friends become partners or GPs, right? It's like, and so I think envy plays out in a number of different levels and probably manifests itself most apparently during like the VC fundraising process, right? Like when you're a GP going out to raise capital from LPs, I think that everyone's got that ambition to announce the larger fund size for X number of reasons, right? Cash flow, marketing out to founders, right? Out competing others, et cetera, et cetera. And so I'm at a shop where that doesn't need to fundraise, so I don't have that dimension, but I think it still applies massively on a personal side. And I actually, going back to this whole first principles thinking, independent thinking, I think that is so critical for me, at least, in stabilizing myself, right? Right. How do I feel I'm actually doing? Do I feel like I've gotten better? Do I feel like I've got, if I look at this from a third party perspective, am I proud of myself, right? A very simple kind of question. And I think that's the only way I keep envy in check. I don't know if it ever goes away. But I think having that, stillness, having that third party perspective has helped me, at least.
I mean, I want people to read the book, so I don't want to spell all the beans, but because what you said does need a little bit more context. So envy is very hard to like completely wash away, right? So people should know about three things. One is good envy and bad envy, what they call Schadenfreude. And then the Indian philosophical answer to it, which is mudita. So good envy is that, Alex is so wonderful. I wish I could also be like her. There's nothing too wrong in that. Like that's looking up to somebody and saying that, yeah, I wish that were also true. Schadenfreude is that, oh, Alex has this. I hope something bad happens to Alex so that I rise. This is Schadenfreude. Mudita is actually just the opposite, which it says that taking pleasure in another person's success. Oh, you became X or you got Y. Wonderful. Happy for you. Really pleasure. What's interesting is that mudita does not have any English word. So it's there in Pali, but the translation of mudita in English does not exist, which is saying something, right? Like that, like in the ancient scriptures, people had thought about this envy game. But great VCs or investors like Warren Buffett, Charlie Munger have talked about envy, Pavlov's dog, etc., etc., etc. in defining their thesis. It's a very important sort of catalyst of the capitalist engine. But there are ways to look at it. And I love the first principles approach. Perhaps there should be some discussion on it tomorrow once you're back talking about investing. But just to wrap things up, Akshay, you had a really interesting, say, first 25, 30 years in this crazy, interesting world. If you were to give your younger self some advice, so to say you've read the book or you've acquired all this life experiences, if you had to give your 18-year-old self three bits of advice for work, what would they be?
Yeah, good question. So I think because look, it's hard to answer because obviously like had to go through all of that to arrive where I am. But I guess there's definitely the one, first things first, right? Have that first principles approach. Do you want to make decisions based on what you think will please people, or do you want to make decisions based on what you think is going to please yourself? So I think that's first. I think second is take joy in, or discover the joy in engaging with anyone, right? Because I think one of the things that I try to practice, and I think I do, is every single conversation is a spark. Every single conversation is enriching, and I have yet to find one that isn't, right? And so I think that that perspective ultimately leads to an inclination to develop relationships. So I think that's number two. And number three is really don't care about money. Money will come. It's really such a red herring. It's a generational thing, but like my father, right? The main thing that I remember in college. So in college, in my second year, I went to a very liberal arts college. Very very liberal arts college in the U.S. And I wanted to be a philosophy and religious studies major. So as a sophomore, rising junior, I was like kind of like mapping out, finally discussing, hey, so I'm going to be a philosophy and religious study double major. And my dad responds to me, he's like, oh, so you want to be poor? Okay, yeah. That's fine. You can be poor, and that really weighed on me. That really kind of impacted me. So I very quickly switched to economics and math, and graduated summa cum laude. And so I think there's optimizing around short-term monetary success is it's just short-term thinking. It doesn't lead to the expectancy in the same way.
Yeah, and I think if you're solving the right problems with the right set of people and having some fun doing so, I think money and other things follow.
Yeah.
That's what this book is about. I hope all of you enjoy reading it. Thank you, Akshay, for participating in our virtual book tour. I look forward to actually having this book discussion in person in Hong Kong, as in when the world opens up. But thank you very much for your time. And we look forward to having you on Network Capital TV tomorrow to discuss VC careers. Thank you.
Thank you. Enjoyed it. Cheers. Bye.
Bye.